Okay, so silver in 2025. It's a hot topic, right?
Absolutely.
Some people saying it's manipulated. But is that real? I mean, what does that even mean? Like for someone like our listeners who are thinking about maybe investing in silver, we've got a ton of research, expert opinions, you name it. So yeah, let's just dive in.
This whole idea of a manipulated silver market, it's really interesting.
Yeah.
It's been around forever, it seems like, and there's this whole like ecosystem built around it.
Mm.
Certain analysts, YouTubers, even some investors, they're convinced that some really powerful forces are out there keeping silver prices low, artificially low.
Yeah, like a real life conspiracy, right?
Exactly.
So let's pretend we're detectives for a minute.
Yeah.
What kind of evidence are they using, these silver detectives, I guess?
Yeah, the silver sleuths.
Yeah. And how are they saying this manipulation's even happening?
Well, one of the big things they point to is unusual trading patterns. They're looking at specifically these sudden price drops in the silver futures market, like really sudden, that seem to kind of go against, typical market behavior.
Right. So like red flags,
Hmm.
things that don't add up.
Yeah, anomalies, like something's fishy.
Yeah, okay, I get that. Can you give us like a real world example? Like what would one of these suspicious trades look like?
Sure. Imagine you're watching the silver price and it's climbing all day,
Right.
steady, like a rocket about to take off. Then, right at the point where it looks like it's going to break through this key level, boom, massive sell off.
Oh, right.
Price just plummets back down, like someone cut the engines.
So it's not just that it dropped, but it's like the timing and how sudden it was.
Right. It happens when silver is gaining momentum. That's what makes it suspicious.
That's pretty sus. So where do these sleuths think these sell-offs are coming from?
A lot of fingers point at bullion banks.
Okay.
Big players, like JP Morgan, UBS. They say these banks are flooding the market with like paper silver contracts to drive the price down. Argument is these banks, they've got a reason to keep silver low, maybe to protect the value of, regular money or even profit from their own bets against silver.
Okay, so there's motive,
Yeah.
potentially. But how do we know these price drops aren't just, the market doing its thing? Markets go up and down, right?
That's the million-dollar question, right?
Yeah.
That's where it gets really debated. Some analysts, like Jesse Colombo, he does those YouTube videos about finance. He calls them manipulation slams, and he says they follow this really specific pattern.
Okay.
Almost always during the New York trading session, often in the morning, and it involves these huge volumes of paper silver just dumped onto the market.
Huh.
He even uses data from groups like Gold Charts R Us. They've looked at silver futures trading going back decades, and they say there's this consistent pattern of these slams happening at certain times.
So there's historical data to back it up.
That's what they say.
Interesting. But even if these patterns are real, how do we know it's deliberate? Could it just be like coincidence?
Yeah, that's the tricky part. There's no like smoking gun, no definite proof. It's more like connecting the dots, looking for patterns, and thinking about who benefits from these moves.
Right.
Proving market manipulation is hard, even for like the people who regulate the markets. There's a lot we know, and then stuff we know we don't know, and then probably even more that we don't even know we don't know.
Right. Yeah. A lot of unknowns. So it's a gray area. Could be happening, but hard to say for sure. We got to be careful about jumping to conclusions, right?
Absolutely.
But let's play devil's advocate for a second. What about the people who say it's not manipulated? What are their arguments?
Well, one of their main points is that silver prices have gone up a lot over the past few decades.
Mm-hmm.
And they say, that doesn't fit the story of a market that's constantly being held down, right?
Right.
They point out that if you look at long-term price trends, there are periods of gains, periods of losses, which, they say is just normal market stuff, not some grand scheme.
Okay, so the price hasn't just been flat, it's gone up and down, but
Right.
overall it's up.
Right.
Makes the manipulation thing a little harder to believe. What else do they say?
They also talk a lot about the fundamentals, like industrial demand,
Okay.
how much silver is being mined, the overall economy, all that.
Right.
They say these factors can explain the price moves without needing to bring in conspiracies.
Yeah, okay.
They point out silver has a ton of uses in electronics, solar panels, and that demand from those sectors can really move prices.
So basically they're saying silver's price is just reacting to the real world, not being controlled.
Right. Supply and demand, that kind of thing.
Yeah, that makes sense.
Hmm.
But even with all that, there's still this question of why silver seems so cheap, especially compared to gold.
Right, you're hitting on a key point. There are analysts who think silver's true value is way higher than its current price. They look at the silver to gold ratio,
Hmm.
which is basically how many ounces of silver you need to buy 1 ounce of gold. Historically, that's fluctuated, but lately it's been way in favor of gold.
Meaning you need a lot more silver to get that same amount of gold.
Exactly. And they see that as a sign that silver is undervalued.
So even if we forget about the manipulation stuff for a second, there's still a good argument that silver is just cheap compared to its history with gold.
Right. Something for investors to think about, no matter what they think about manipulation.
Definitely. But let's shift gears a bit. Let's talk about the people who are the loudest about silver manipulation, the ones who have, made it their whole platform. What's their angle? How do they benefit from this whole narrative?
It's tough,
Yeah.
because some of them, they truly believe it, that the system's rigged and they're trying to expose it. They
Okay.
see themselves as like crusaders fighting for the little guy against, big, powerful forces.
Right.
And to be fair, there's a history of market manipulation in different industries. So it's not completely crazy to think it could be happening in silver, too.
Yeah, it's healthy to be skeptical,
Exactly.
but there's also a financial side to this, right?
Oh, absolutely. For some of these silver gurus, let's call them, they sell books, newsletters, investment advice, and the more they can convince people that silver is being suppressed, the more followers they get, the more customers.
So there's a potential conflict of interest there.
Definitely. They have skin in the game. They need that narrative to stay alive, even if the evidence isn't clear-cut.
Right. Something to keep in mind for investors.
Mm-hmm.
So let's move to something more concrete. Junior silver miners.
Yeah.
These companies are often presented as a way to, like, ride the wave if silver prices go up. But does it even matter to them if the market is manipulated? Or are they so cheap right now that they'll do well regardless?
That's a great question, and it gets to the core of how these junior miners work.
Yeah.
They're usually early stage, meaning lots of potential, but also lots of risk.
Right.
They're exploring, developing mines, trying to ramp up production. Their success is tied to the silver price. Price goes up, they make a lot of money. Their stock goes up. Price goes down, they struggle.
So they're very sensitive to the silver price.
Yeah.
But how does that connect to the manipulation question?
Well, if the market's being manipulated, if silver is being kept artificially low, it could be hurting these junior miners,
Okay.
making it harder for them to raise money, develop their projects, even stay in business, because the silver price isn't reflecting its true value, potentially.
So manipulation could be like holding back the whole sector.
In a way, yeah. It's like they're playing with a handicap.
But on the other hand, if they are super undervalued, like some analysts say, wouldn't they be good investments even at these prices?
That's the gamble some investors are making.
Okay.
They're betting that these miners are so cheap relative to their potential that even if silver stays flat for a while, eventually it'll catch up.
So it's a high risk, high reward kind of thing.
Exactly.
Comes down to how much risk you're willing to take and your overall strategy. Some people are all in on silver long term, think it's going up no matter what. Others are more cautious, want to see a breakout before they jump in.
Yep, that's the market. Different strokes for different folks.
You're right. And it's important to remember not all junior miners are the same.
Oh, absolutely. Some have better management, better projects, better financials. Got to do your research.
Don't just blindly buy into hype.
Yep.
Look at the company itself, make sure it's solid. Speaking of research, there's this one analyst, Don Durrett, who's made a name for himself in the junior silver space. He's got a knack for finding these undervalued companies with huge potential, and he's been a big believer in silver for years. So let's talk about his top picks, specifically Discovery Silver, Vizsla Silver, and Avino Silver and gold mines. What sets these companies apart?
Don Durrett, yeah, he's definitely someone to pay attention to if you're looking at junior silver miners. He's really good at finding companies with, great assets, good management, and a lot of upside. He thinks these three companies are in a great position to profit from a rising silver market.
Okay, so let's take them one by one, starting with Discovery Silver. What's their story? What are their key assets? And what does Durrett like about them?
Discovery Silver is interesting because they've got this unique combo of assets.
Okay.
On one hand, they just got this producing gold mine in Canada, so that gives them some steady cash flow, right?
Makes sense.
But the real prize is their Cordero project. It's in Mexico. It's considered one of the biggest undeveloped silver deposits in the world. It's massive, estimated to have over 1 billion ounces of silver.
1 billion ounces. Wow, that's a lot of silver. So what's the timeline for getting that project up and running?
They're still working on permits and development, but Duritz seems pretty confident they'll get the green light and be producing in the next few years. He thinks Cordero could be a game changer for Discovery, turn them from a small gold producer into a big silver player.
So it's like they have the stability of the gold mine, but also this huge potential silver play. That's an interesting mix.
It is.
What about Vizsla Silver? What's their deal?
Vizsla Silver is another one of Duritz's favorites, and they're a pure silver play. All they do is silver exploration and development. Their main asset is the Panuco project, also in Mexico. It's considered a high-grade silver deposit, meaning the silver concentration is higher than average, and they've got a lot of room to explore and potentially find even more silver.
High grade meaning they can get more silver out of each ton of rock they dig up.
Exactly. Makes it more profitable. And Vizsla's been getting some really impressive drilling results. They keep finding high-grade silver even better than they expected.
That's promising.
Yeah, and they've done a preliminary economic assessment, a PEA, which basically looks at how profitable a project could be. And the numbers for Panuco look really good.
So they've done the math, and it seems like it could be a moneymaker.
Yeah, it does. What about their management team?
Yeah. Are they experienced? Can they actually pull this off?
Duritz says their management team is one of their strengths.
Okay.
They've got a good track record in the mining industry, and they're known for their technical expertise.
So they have the right people in place. That's important, especially with junior miners.
Absolutely.
Okay, last one. Avino Silver and Gold Mines. What's their story, and why does Duritz like them?
Avino is different from Discovery and Vizsla because they're already producing silver and gold. They have several mines in Mexico, including their main one, the Avino mine, and another one nearby called San Gonzalo.
So they're not starting from scratch.
Nope, they've got a track record, which lowers the risk a bit. And Duritz thinks they're undervalued compared to what they're producing now and how much they could potentially grow. They've also got a bunch of exploration projects going on, which could add to their resources.
So there's potential for them to really ramp up production.
There is.
But what about their finances? Are they in good shape?
That's where Avino's had some ups and downs.
Okay.
Metal prices going up and down, some operational issues, and they've had some debt to deal with.
Sounds like typical mining stuff.
Yeah, pretty much. But Duritz thinks they've turned a corner, that they're in a much better financial position now.
Okay, good to hear.
And they've got a new CEO, David Wolfen, who's known for getting things done, making operations more efficient. Duritz sees him as a big plus for Avino, someone who can help them reach their full potential.
So they've got the right leadership, and hopefully the worst is behind them. That's good. But let's be real, investing in junior miners is always risky, right? I mean, these are young companies, no guarantees their projects will work out. So what are some red flags investors should watch out for before jumping into any of these companies?
Yeah, that's crucial. Don't just go in blind. Got to understand the risks. One big red flag is something called dilution. Basically, the company keeps issuing more shares, which can lower the value of the shares you already own. Not good for you as an investor.
So look for companies that are careful with how they issue shares, right? What else should we watch out for?
Poor management is a big one.
Yeah, I think so.
If the people running the company are inexperienced, not good at their jobs, or maybe have a history of doing shady stuff, stay away.
Right, you want a team that's honest, knows what they're doing, and has a good plan for the company.
Exactly.
Right.
Watch out for companies that have projects in, risky places politically.
Right.
Some countries are much better for mining than others.
Right.
If a company's big project is in a country that's known for, taking over resources, corruption, or just instability, it could cause big problems.
So geopolitics matter too.
Absolutely. And look at the projects themselves. Make sure there's a real plan to develop them.
Right, not just hype, but a solid plan.
Yeah. Look for companies that have done their homework, got the permits, know how much it'll cost, how long it'll take. That's where the real value is.
Okay, don't get swept up in the excitement. Look for substance.
Exactly. And remember, don't put all your eggs in one basket. Diversification is key.
Right, spread your bets, reduce the risk.
Exactly.
Okay, I think we've laid a good foundation here. We talked about the whole manipulation debate, why some people think silver is a good investment, and even dipped our toes into junior silver miners.
Yeah, it's a good overview.
But before we go deep on Don Duritz's picks, I want to go back to something you mentioned earlier, this whole physical silver versus paper silver thing.
Okay.
Can you explain that a bit more, what's going on there, and why is it important?
Yeah, that's an important distinction. Basically, there are two ways to invest in silver. You can buy physical silver, like bars or coins, or you can invest in paper silver, which is like a contract that says you own some silver, but you don't actually hold the metal.
Okay, so it's like owning a house versus owning a piece of paper that says you have a share in a house.
That's a good way to put it. And what we're seeing is that the price of physical silver and the price of paper silver are getting further apart.
Really?
Yeah, physical silver is trading at a premium, meaning you have to pay more to actually get your hands on the metal.
It's like there's this whole separate market for physical silver with its own rules. What's causing that?
A lot of it comes down to trust or lack of it. Some investors are losing faith in the paper silver market.
Yep.
They're looking at those futures contracts and ETFs as like IOUs that might not be worth much if everyone suddenly wants to trade their paper silver for actual metal.
I see.
So they'd rather hold the silver themselves, even if it costs more.
So it's like a flight to safety, right?
Ex-
Wanting something real in a world where everything seems less and less real.
That's a good way to put it. And this whole thing is being amplified by those same narratives about market manipulation.
Right. If you think the silver market's being controlled, it makes sense to want to own the actual metal.
Absolutely. It's like your own personal insurance policy. If the paper silver market goes bust, you still got your physical silver.
But wouldn't this price gap create an opportunity? Couldn't someone buy cheap paper silver, then demand the physical metal and make a profit?
You'd think so, right? But there are some hurdles. First, it's not easy to take delivery of a lot of silver. Where would you store it? How would you move it?
Right, logistics.
And then there's the risk that whoever you bought the paper silver from might not actually have the metal to give you.
So it's not a simple buy low, sell high situation.
Not really, no. And that's why this premium for physical silver is sticking around. It shows how uneasy the market is. A lot of investors are hedging their bets and going for the security of owning the real deal.
Okay, that makes sense. Back to the junior miners. Does this premium affect them directly, or are they mainly focused on the paper market?
It does affect them, but not in a straightforward way. Junior miners, their business is digging silver out of the ground. So if people really want physical silver and they're willing to pay more for it, that's a good sign.
True.
It means there's a strong underlying demand for what they're producing.
So it's a positive indicator.
It is. It suggests there's a real market for their silver, even if the paper market's being messed with.
Okay, back to Don Durrett's top picks. Discovery, Vizsla, Avino. We already talked about Discovery's gold mine and their big silver project. Let's dig deeper into Vizsla's silver. What makes their Panuco project in Mexico so special?
The Panuco project is what we call a high-grade epithermal silver deposit. It basically means the silver is concentrated in these veins that form pretty close to the surface, so they're easier and cheaper to mine.
So like finding a vein of gold but with silver.
Exactly.
Easier to get to, more profitable.
You got it. And Vizsla's been hitting high-grade silver in their drilling program, exceeding expectations. They've also defined a large resource base, which means there's a lot of potential to expand the project.
So good geology, lots of silver,
Mm.
but can they actually mine it profitably?
That's where the preliminary economic assessment, or PEA, comes in. It looks at a project's potential profitability, taking into account all the costs, metal prices, and so on. And Vizsla's PCA for Panuco showed some impressive numbers.
Like what? What were the highlights?
They estimated an after-tax net present value, or NPV, of over $1 billion, and that was using a pretty conservative silver price. They also projected an internal rate of return, or IRR, of over 50%, which is really high for a mining project.
Those are some impressive numbers. Sounds like Panuco could be a big winner for Vizsla.
Potentially, yes. But it's important to remember that PEAs are just estimates.
Right.
They're based on models and assumptions, and things can change.
So investors need to be cautious, but it's still a good sign. What else is good about Vizsla?
Durrett really likes their management team, their experience, and their focus on creating value for shareholders. They've also been very transparent with investors, providing regular updates and detailed reports.
So they're doing a lot of things right. High-grade deposit, good economics, experienced team, open communication.
Yep, it's a good foundation. But there are still risks.
Of course, always risks. What are some of the challenges Vizsla might face?
Well, they're exploring and developing a mine, which always has risks.
Right.
They could run into unexpected problems with the geology, delays in getting permits, or costs could go higher than planned, and silver prices could drop, which would hurt their profits.
So there are no guarantees. Investors need to understand those risks. But if Vizsla executes well, the rewards could be big. Okay, let's move on to Avino's silver and gold mines. They're different from Discovery and Vizsla because they're already a producing miner. What's the investment case for Avino?
Durrett sees Avino as a turnaround story. They've had some rough patches, but he thinks they're set for growth. They've got those mines in Mexico, a strong management team, and they're working on some really interesting exploration projects.
So they're not just a speculative play, they've got some real assets producing revenue. What makes Durrett think they're turning things around?
Well, they've made some smart moves lately, like bringing in that new CEO, David Wolfin.
Right.
He's known for being great at operations. They've also streamlined things, cut costs, and are focusing on making their existing mines as profitable as possible.
So they're tightening things up, getting their act together.
That's one way to put it.
What are their main assets and what's the plan for growth?
Their main asset is the Avino mine, which has been producing for over 50 years.
Wow, 50 years. That's impressive.
It is. They also have the San Gonzalo mine, which they bought a few years ago and have been expanding. Plus, they're exploring a bunch of other areas nearby, hoping to find more silver and gold to mine.
So mix of current production and potential future growth. What's the timeline for all this, and what should investors be watching for?
Their goal is to significantly increase production over the next few years, aiming for over 10 million ounces of silver equivalent per year.
Okay.
The things to watch are the expansion of San Gonzalo, the development of any new discoveries, and how well their exploration program is doing.
Sounds like there's a lot to keep an eye on.
There is.
But of course, like any junior miner, there are risks. What could go wrong for Avino?
Well, the mining industry is unpredictable.
Right.
Metal prices can swing wildly, costs can go up unexpectedly, plus they've got some debt which can limit their options, and you never know when you might run into operational problems or permitting delays.
So it's a balancing act, weighing those risks against the potential reward.
Exactly. But if Avino can execute on their plans, they could do really well if the silver market takes off.
Okay, we've covered Don Druitt's top three: Discovery, Vizsla, and Avino. All interesting companies, each with their own strengths and weaknesses. But before we wrap up on junior miners, let's talk diversification. You shouldn't put all your eggs in one basket, right?
Definitely not.
What are some other junior silver miners that people might want to check out?
Well, there are a lot of options out there, but a few that come to mind are Endeavor Silver, Guanajuato Silver, and First Majestic Silver.
Okay, let's take a quick look at each of those. What's the story with Endeavor Silver?
Endeavor Silver is a bit bigger than a typical junior miner. They're considered mid-tier, and they've got a good track record.
Okay.
They have operating mines in Mexico, they consistently produce silver, and they've had good results from their exploration programs.
So they're more established, less risky than a pure junior. What makes them appealing to investors?
They've been profitable, they have a good management team, and they own some really good assets.
Sounds solid.
They're also in a good position to do well if silver prices go up.
So they offer a bit more stability, but with some potential for growth.
What about Guanajuato Silver? What's their story?
Guanajuato Silver is a newer company, but they're making a name for themselves.
Oh, so?
They've got a collection of high-grade silver projects in Mexico, including an old mine that they're bringing back online.
So they're combining the excitement of exploration with the potential for production in the near future.
Exactly. It's an interesting mix.
What makes them stand out?
They have a very experienced management team. They're really focused on keeping costs low, and they've got a good track record of delivering results. Plus, they're located in a really good silver mining district in Mexico, which means they have access to infrastructure and skilled workers.
So high-grade projects, experienced team, good location. Sounds promising. What about First Majestic Silver? What's their deal?
First Majestic Silver is one of the biggest silver producers in the world.
Wow, okay.
They have a bunch of mines in Mexico, and they're known for giving back to their shareholders.
So a big established company. Why are they a good investment? They've been growing production for a long time, they're profitable, and they have a strong management team. Plus, they're always looking for and developing new projects, which could make them even bigger.
So they're a combination of size, stability, and growth potential that's appealing to a lot of investors.
Definitely.
But remember, folks, this is just a starting point. Do your own research, really look into these companies, and see if they fit your investment goals and how much risk you're comfortable with.
Exactly. Don't just take our word for it. Do your homework and make sure you understand the risks before investing in any junior silver miner.
Right. It's your money, so do your own research.
Yeah.
But I think we've shown there's a lot of potential in the junior silver mining space.
There is.
Whether you believe the silver market is being manipulated or not, the fundamentals are strong, And these companies could benefit big time if silver prices go up.
And even if you don't want to invest in individual miners, you can still invest in silver through ETFs or just buy physical silver.
Right, there are a lot of different ways to get involved. It just depends on your goals and your risk tolerance.
Exactly. And that's what makes the silver market so interesting. It's dynamic, it's volatile, and there's always something happening.
Well said. And that's where we'll leave it for today.
Sounds good.
We covered a lot in this deep dive. We talked about the whole manipulation debate, why silver could be a good investment, and explored the world of junior silver miners.
Hopefully, it gave our listeners some things to think about and some ideas for further research.
Absolutely. The silver market is full of twists and turns, but one thing's for sure,
Yeah.
it's never boring.
Uh,
Thanks for joining us on this adventure, and we'll be back soon with another deep dive into a whole new topic. Until then, happy investing.
You're right. It's a really important thing to understand about the silver market, this difference between physical and paper. Basically, you can invest in silver in two ways, right? You can buy actual silver, like bars, coins, hold it in your hand. Or you can invest in what they call paper silver, which is it's like a claim on silver that you don't physically own it.
Okay, so it's kind of like owning a house versus like owning a mortgage on a house, right?
Yeah, that's a good analogy. One is a tangible asset, the other is more of a financial instrument tied to the actual metal.
Right. Okay, I get it. And you're saying there's a gap between these two, the price of physical versus paper.
Exactly. We're seeing physical silver trading at a premium, meaning you got to pay more to get your hands on the actual metal.
So it's like there's this hidden market for physical silver where the normal rules don't apply.
Kind of, yeah. It's a reflection of what's going on in the broader market.
What's driving this disconnect?
Well, I think a lot of it boils down to trust.
Yeah.
Or maybe the lack of it.
Okay.
Some investors are getting a little skittish about the paper silver market, you know?
Yeah.
They're looking at those futures contracts, the ETFs, as kind of like IOUs. And they're worried that if everyone suddenly wants to trade those IOUs for real silver, well, there might not be enough to go around.
So they'd rather have the metal itself,
Yeah.
even if it costs more upfront.
Precisely. It's a classic flight to safety, you know? In a world where so much feels uncertain, people want something tangible, something they can hold.
Makes sense to me. And this whole thing is being fueled by those manipulation theories we were talking about, right?
Oh, absolutely.
If you think the market's being rigged, you're going to want to own the real thing,
Yeah.
something harder to manipulate.
Exactly. It's like a safety net. If the paper market goes poof, you've still got your silver.
Right, like a backup plan. But wouldn't this price difference create an opportunity for, like, savvy traders?
You'd think so, wouldn't you?
Yeah.
Buy the cheap paper silver, then demand the physical, make a profit on the difference.
Right, classic arbitrage.
In theory, yes. But in practice, it's not that simple. There are logistical hurdles to actually getting your hands on a lot of physical silver.
Oh, right, yeah. Where do you put it all?
Exactly. Storage, transportation, it gets complicated. Plus, there's always the risk that whoever you bought the paper silver from can't actually deliver the metal.
So there's a counterparty risk, too.
Yeah.
It's not as easy as it sounds.
Nope. And that's why we keep seeing this premium for physical silver. It's a sign that the market's a little on edge, and a lot of people are choosing the security of owning the metal outright.
Okay, so back to our junior miners. Does this premium on physical silver affect them directly? Or are they mainly playing in that paper silver market?
It does affect them, but in a roundabout way.
Okay.
Their business is digging silver out of the ground, right?
Right.
So when they see that people really want physical silver and they're willing to pay extra for it, that's good news.
Okay, I see.
It's a signal that there's a strong underlying demand for what they're producing.
So it kind of validates their whole business model.
Exactly. It suggests that there's real value in that silver, even if the paper market is being, distorted.
Right. It backs up the argument that silver is actually undervalued.
It does. If people are paying a premium for the physical stuff, it implies they think silver is worth more than what the paper market's showing.
Interesting. Okay, let's get back to those top picks from Don Durrett. Discovery Silver, Vizsla Silver, and Avino Silver and Gold Mines. We've already covered Discovery's blend of gold and silver assets. Let's dive a bit deeper into Vizsla Silver. What makes their Panuco project in Mexico so special?
Well, the Panuco project is what's called a high-grade epithermal silver deposit. That means the silver there is concentrated in veins that formed fairly close to the surface. Makes them easier and cheaper to mine.
Oh, okay, so it's like finding a vein of gold but with silver.
Yeah, that's a good way to think about it.
Easier to get to, potentially more profitable because you're not digging as deep.
Exactly. And Vizsla has been finding really good grades of silver in their drilling, better than they initially expected. They've also confirmed a large resource base, which means there's a lot of potential for expansion.
So the geology looks good, and there seems to be plenty of silver down there. But can they actually get it out and make money?
That's where their preliminary economic assessment, or PEA, comes in.
Right.
It's basically a study that looks at how profitable a mining project could be, taking into account all the costs, the metal prices, everything. And Vizsla's PEA for Panuco showed some really impressive numbers.
Oh, okay. Look, what kind of numbers?
Well, they estimated an after-tax net present value, or NPV, of over $1 billion. And that was using a pretty conservative silver price assumption. They also projected an internal rate of return, or IRR, of over 50%, which is really high for a mining project.
Wow, those are some big numbers. Sounds like Panuco could be a real moneymaker for Vizsla.
It has the potential, yes. But we always have to remember that PEAs are just estimates.
Right.
They're based on models and assumptions, and things can change. Costs can go up, metal prices can drop.
So it's not a sure thing, but it's a positive sign. What else is working in Vizsla's favor?
Durit is really impressed with their management team, their experience, and their focus on delivering value to their shareholders. They've also been very transparent, keeping investors updated and providing detailed information about their progress.
So they're hitting a lot of the right notes. High-grade deposit, favorable economics, experienced team, and open communication. Sounds like a solid foundation for a junior miner.
It does, but let's not forget about the risks.
Right, always risks. What are some of the potential roadblocks Vizsla might face?
Well, just like any company trying to find and develop a mine, there's always the chance of unexpected problems. They could run into issues with the geology, have trouble getting permits, or face cost overruns. And of course, silver prices could drop, which would definitely impact their profitability.
So there's no guarantee of success. Investors need to keep those risks in mind. But if Vizsla can execute their plan, the payoff could be significant. Okay, let's move on to Avino silver and gold mines. They're a bit different from Discovery and Vizsla because they're already producing. What's the investment thesis for Avino?
Durit sees Avino as more of a turnaround story.
Okay.
They've had their struggles in the past, but he thinks they're poised for growth. They have a portfolio of producing mines in Mexico, a strong management team, and some really exciting exploration projects in the works.
So they're not just a speculative exploration play, they have actual mines producing revenue.
Yeah.
What makes Durit think they're turning things around?
Well, they've made some key changes in recent years, like bringing in their new CEO, David Wolfin. He has a great reputation for improving efficiency and getting operations running smoothly. They've also streamlined their operations, cut costs, and focused on optimizing their existing mines.
So they've been doing the groundwork, getting their house in order.
Exactly.
What are their key assets and what's their plan for growth?
Their flagship asset is the Avino mine, which has been in production for over 50 years.
Wow, 50 years. That's impressive.
It is. They also have the San Gonzalo mine, which they acquired a few years ago and have been successfully expanding. And they're exploring a bunch of other targets in the area with the potential to add a lot of new production in the coming years.
So they've got existing production and exploration upside. What's the timeline for this growth, and what are some key milestones that investors should watch for?
They're hoping to ramp up production significantly over the next few years, with the goal of reaching over 10 million ounces of silver equivalent production annually.
Okay.
The main things to keep an eye on are the expansion of the San Gonzalo mine, the development of any new discoveries, and the success of their ongoing exploration program.
So a lot going on with Avino, but as with any junior miner, there are risks to consider. What are some of the potential challenges they might face?
Well, the mining industry is inherently cyclical, so they're exposed to fluctuating metal prices and unpredictable operating costs. They also have a history of debt, which can limit their financial flexibility. And there's always the risk of unexpected operational challenges or delays in getting permits.
So investors need to weigh those risks against the potential rewards. But if Avino can execute on their plans, they could be a big winner if the silver market takes off. Okay, we've covered the Don Durit's top 3 picks: Discovery Silver, Vizsla Silver, and Avino Silver and Gold Mines. They're all interesting companies, each with their own strengths and weaknesses. But before we wrap up our discussion of junior silver miners, I want to talk about diversification. It's important not to put all your eggs in one basket, right?
Absolutely.
What are some other junior silver miners that investors might want to consider?
Yeah, diversification is super important when you're investing, especially in a sector like junior mining where things can be pretty volatile.
Right. Don't put all your eggs in one basket. No matter how much you like a particular company, spread the risk around, explore different options.
Exactly. It's like building a balanced portfolio, you know?
Yeah.
You want a mix of different companies, different projects, even different parts of the world so that if one thing goes south, it doesn't wipe you out.
Makes sense. So, besides Don Durrett's top picks, what are some other junior silver miners that people might want to add to their watch list?
Well, there are a ton of companies out there. It's a pretty active space, but a few that come to mind are Endeavor Silver, Guanajuato Silver, and First Majestic Silver.
Okay, let's take a quick look at each of those. What's the story with Endeavor Silver?
Endeavor Silver is a bit bigger than your typical junior miner. They're what we call a mid-tier producer, and they've got a solid track record. They've got mines in Mexico that are already producing, and they've consistently delivered good production and exploration results.
So they're a bit more established, not as much of a pure exploration play.
Right.
What makes them attractive to investors?
Well, they have a history of profitability, a solid management team, and they own some really good assets. Plus, they're in a good position to benefit if silver prices go up.
Okay, so a bit more stability, but still with some upside potential. What about Guanajuato Silver? What's their story?
Guanajuato Silver is a Newell company, but they're making waves in the industry. They've got a portfolio of high-grade silver projects in Mexico, including an old mine that they're restarting.
Oh, interesting. So they've got the excitement of exploration, but also the potential for some near-term production.
Exactly. It's a good combination.
What makes them stand out?
Well, they have a very experienced management team. They're really focused on controlling costs, and they've got a track record of delivering results. Plus, they're located in a really good silver mining district in Mexico, which means they have good access to infrastructure and a skilled workforce.
Okay, so high-grade projects, experienced team, good location, sounds promising. What about First Majestic Silver? What's their deal?
First Majestic Silver is one of the biggest primary silver producers in the world. They own a bunch of mines in Mexico, and they're known for taking care of their shareholders.
Wow, so they're a major player in the silver space. What makes them a good investment?
They've got a long history of growing production, they're profitable, and they have a strong management team. Plus, they're actively exploring for and developing new projects, which could make them even bigger.
So they're a combination of scale, stability, and growth potential. That's appealing to a lot of investors.
Absolutely.
But remember, folks, this is just a starting point.
hmm
Do your own research. Dig into these companies, look at their financials, their management teams, their projects, and see if they're a good fit for you.
Exactly. Don't just take our word for it. Do your homework and make sure you understand the risks before you invest in any junior silver miner.
Right. It's your money, so do your research.
Mhm.
But I think we've shown that there's a lot of potential in the junior silver mining space. Whether you believe the silver market is being manipulated or not, the fundamentals look good, and these companies could benefit big time if silver prices head higher.
Absolutely. And even if you're not comfortable investing in individual miners, there are other ways to get exposure to silver, like through ETFs or by owning physical silver.
Right. There are different ways to play the silver market, depending on your goals and your risk tolerance. Well, I think that about wraps it up for our deep dive into silver.
Yeah, we covered a lot of ground.
We discussed the debate over market manipulation, explored the factors that could drive silver prices higher, and we even dove into the world of junior silver miners, highlighting some promising companies to watch. Hopefully, we've given our listeners some food for thought and some ideas for further research. As always, we encourage you to do your own due diligence before making any investment decisions. Thanks for joining us, and we'll see you next time for another deep dive into a whole new topic.